Welcome to Weekly Market Research from Fullerton Markets. Let's dive into the latest market trends and insights. Bitcoin surged over 4% to $104,672, joining a broader crypto rally fueled by reports of President-elect Donald Trump's potential executive order making crypto a national priority. Smaller cryptocurrencies like Litecoin jumped 30%, while platforms like Coinbase and Robinhood saw gains. Discussions of a U.S. Bitcoin stockpile and a potential crypto advisory council are heightening expectations for regulatory clarity and innovation. Bitcoin ETFs attracted $1 billion in inflows, and investors predict announcements next week could push Bitcoin to a new record high. Bitcoin has risen over 11% in 2025. BTC USD weekly. Bitcoin experienced gains following the 2024 halving, marking a period of accumulation before resuming its bullish trend. Currently, the price is exhibiting a similar pattern, with potential consolidation between $88,000 and $108,000. UK retail sales unexpectedly fell by 0.3% in December, signaling cautious holiday spending amidst a cost of living crisis. This weak data has reinforced expectations for Bank of England rate cuts, with markets now pricing over 75 basis points of reductions in 2025. Finance Minister Rachel Reeves faces mounting challenges, including slow economic growth, inflation cooling to 2.5%, and high bond yields driving up borrowing costs. Analysts expect BOE to cut interest rates multiple times this year, starting with a widely anticipated 0.25% reduction on February 6th. Sterling weakened further against the euro and dollar, GBP USD, daily. In the final quarter of 2024, the pound performed poorly against the USD, dropping from 1.3400 and losing nearly 10%. The previous year's low of 1.2300 has now become the peak in the third week of 2025, with no signs of recovery for the pair. India's access to cheap Russian oil is under threat due to sweeping U.S. sanctions on Russian energy firms and tankers, potentially causing supply disruptions of up to 500,000 barrels per day. This could lead to higher oil prices and inflation in India, which imports 88% of its oil, with 40% coming from Russia. Alternatives like Middle Eastern crude are costlier, and global benchmarks like WTI have risen to $77 per barrel. The stronger U.S. dollar and rising tanker rates could magnify the economic impact, straining government finances and consumer purchasing power. Throughout 2024, the $78 to $80 range served frequently as a supply zone for crude oil. Geopolitical tensions drove the price up by nearly 15% over the last 20 trading days, but a potential correction around this zone appears likely. Stay tuned as we delve deeper into these market shifts and their potential future impacts. We are Fullerton Markets.